The government just put money back in your pocket, and most seniors over 65, the people who need it most, have absolutely no idea it exists. It's called the senior bonus deduction. It's real, it's already law, and if you qualify, it could put thousands of dollars back in your hands starting right now. But here's what nobody's telling you. The people who stand to benefit the most from this are exactly the people least likely to hear about it. So today, we're fixing that. On July 4th, 2025, Independence Day, President Donald Trump signed a sweeping piece of legislation into law called the One Big Beautiful Bill. Inside that bill, buried in hundreds of pages of tax code, was one provision aimed directly at you. A brand new $6,000 bonus tax deduction, exclusively for Americans age 65 and older. If you're married and both you and your spouse are over 65, that's $12,000. Read that again. $12,000 in additional deductions, on top of what you were already getting. This isn't a campaign promise. It's not a rumor on Facebook. It is already the law of the United States. And it applies to tax years 2025 through 2028, meaning right now, this year, you can use it. To understand why this matters, you have to understand the quiet tax trap millions of seniors have been living in for decades. Here's how it worked. The government taxes your Social Security benefits. Not all of them, but up to 85% of your benefit can be subject to federal income tax, depending on your total income. For a retiree living on a fixed income, that's brutal. You worked your whole life, you paid into the system, and then the IRS takes another cut on the way out. Trump promised during his 2024 campaign to end federal taxes on Social Security entirely. And the White House says about 88% of seniors will now pay zero federal taxes on their benefits, up from 64% before this bill. But here's the truth they don't advertise. He didn't directly eliminate the tax. What he did instead was create a deduction big enough that for most middle-income retirees, the end result is the same. Your taxable income drops, your Social Security becomes effectively untaxed, your bill to the IRS goes down, or disappears entirely. Now here's the part that matters most. Who gets this money? First, you must be 65 or older by December 31st of the tax year. If you're 64, even by one day, you don't qualify. Second, your modified adjusted gross income must be below $75,000 if you're single, below $150,000 if you're married filing jointly. If your income is below those numbers, you get the full deduction. If your income is between $75,000 and $175,000 as a single filer, the deduction starts to shrink. Above $175,000 single or $250,000 married, it phases out completely. But here's who benefits most: the middle income retiree, the person making $40,000 to $60,000 a year in combined Social Security, pension, and IRA withdrawals. The person financial planners call the tax torpedo zone, where every extra dollar of income causes more of your Social Security to become taxable. For that person, this $6,000 deduction is a genuine lifeline. One analyst at a median income of around $50,000 a year could see their federal tax bill drop by nearly $500 annually. For couples, that number grows. And financial experts say the 3-year window, 2025 through 2028, is critical. Plan now, because when it expires, it's gone. But wait, there's more. Because while the senior bonus deduction is already law, Trump announced something else in his February 2026 State of the Union address that's still making its way through Washington. A federal retirement savings match, up to $1,000 per year, for the 54 million American workers who don't have access to an employer-sponsored 401k. Think about who that is: the small business employee, the gig worker, the part-time worker, the person who spent their career in jobs that never offered a retirement plan. Trump's proposal would give them a government-backed retirement account, similar to the thrift savings plan federal employees receive, and match their contributions up to $1,000. It's not law yet. Details are still being worked out. But if it passes, it would represent one of the most significant expansions of retirement access for working-class Americans in a generation. So what does this mean for you? If you are 65 or older, talk to a tax professional or CPA before you file. This deduction stacks on top of your existing standard deduction and the age-based extra deduction you may already be taking. For 2025, a married couple both over 65 could now shield over $46,000 of income from federal taxes when you add everything together. If you're taking IRA withdrawals or required minimum distributions, those count toward your income. You'll want to plan carefully to stay within the deduction limits. If you voluntarily suspended your Social Security checks to let your benefit grow, experts say the 3-year window of this bonus deduction is actually a smart time to do exactly that. And if you have children or grandchildren, tell them. Because 70% of Americans between 55 and 64 have some retirement savings, but 30% have nothing, zero. And the programs being introduced right now could change that.